Namaskar and welcome to Sansad Television. I am Vishal Dahiya and you're watching our show Perspective, where we bring you detailed analysis of key national and international issues as well. Today we're going to talk about the price cap on Russian oil exports. Now, US Treasury Secretary Janet Yellen has proposed to cap a price of Russia's oil exports along with other G7 allies as a way to limit Russia's earnings while keeping Russian oil flowing into the global economy. The cap is set to take effect on 5th of December, the same day when European Union will also impose a boycott on most of Russian oil. Russia, the world's number 2 in oil production, has already rerouted much of its supply to Asian countries, including India and China, at discounted prices. Russia has said it will not observe a cap and will halt deliveries to countries which follow this process. Russian President Vladimir Putin warned on Thursday that Western plans to introduce oil price cap could have grave consequences for energy markets. So what is the price cap on Russian oil and how would it work? More importantly, what would be its impact on the global economy and energy markets as well? To try and understand in a much better way, we have with us today a distinguished panel of experts. Let me first introduce them to you, beginning with Kate Dourian, who is joining us. She's the contributing editor with MEES. We also have with us Mr. Saurabh Chandra, former secretary from the Ministry of Petroleum and Natural Gas with the Government of India. And McLain Gill, a geopolitical analyst, is also joining us. So is Professor Gulshan Sachdeva from the Center for European Studies at JNU. Welcome all of you to Sansad Television. I'll begin with you, Kate, and then let's begin with the basic question here. Let's first try and understand this concept of price cap on Russian oil exports. Of course, it's meant to try and put some sort of brakes on the Russian finances and Western countries, Western allies, the G7, specifically Ukraine's allies, are calling it to tackle one of the ways to war in Ukraine. But how is it going to work?
Well, I mean, nobody really knows at the moment because they haven't agreed on the price. I think there's a dispute within the EU as to where the price cap should be. So should it be 70? Should it be lower? Some countries want it higher, some countries want it lower. And I don't think anybody really understands at present how it's going to be applied. But what it will do, once it does come into effect, along, as you said, the ban on seaborne exports, imports by the EU of Russian crude, it's going to dislocate the market. It's going to create a sort of dual price market. So you have an official price and you have the discounted price. And if you look at how Russia has already discounted its oil to India, China, Turkey, it is already below the proposed price caps of, somewhere between 65 and 70. So I think initially it will result in disruption because, insurers, tanker owners and traders just won't know how it's going to work out. And so you might see a drop in exports and some shut in production if necessary by Russia. But eventually, I think they will find a way out of it. And if you're selling at 25 to 30 per barrel below the official price anyway to certain Asian countries, then the price cap won't even apply. And it remains to be seen how Russia responds.
Okay. Mr. Gill, how do you view this move by the Western nations, and then also in terms of the kind of spillover effect it might have when we're talking about the energy markets?
Right, thank you. And that is, in fact, a very important question. The worry that everyone's having right now is, whether initiating a reckless policy due to time pressure may result in, of course, the further exacerbation of the international oil market. So this would definitely come at the expense of the entire world, particularly the developing world. So there is a question, of course, whether Russia will obey such policies, as you have rightfully mentioned, especially last month, Russian senior officials, including President Putin, he stated that they will not settle below the market price. So, the short-term and mid-term effect of this, as they have mentioned, if necessary, would be to cut production by 70% at least, while actively establishing alternative lines of supply chains really to bypass the EU. Now, for the long term, of course, we are looking into, of course, Russia tapping into China's potential, to perhaps fill in the gap when it comes to the tankers. So China might supplement that with its own, insurance companies. And of course, Russia may look into something similar in the long term. But what this will do is the uncertainty, of course, and the gaps in between may result in significant and critical shifts and shakes in the international oil market, and it comes to the expense of the development of the world. And this is, in fact, catastrophic given the socio-economic impact we are already reeling with what's happening right now.
Okay. Professor Sachdeva, one very interesting aspect here to consider also is, given the complexities involved, the question remains, is this a worthwhile move by the Western countries, given the fact that Russia has already rerouted most of its supply to Asian countries? Is it going to have, achieve those desired results which perhaps these countries are looking for? Or it might, end up further, creating troubles for the energy markets and the global economy?
Well, you're right. I mean, it's very uncertain at this point of time how this is going to impact energy market. But one thing is quite clear, that is already, there is so much uncertainty in the energy market. So this will further disturb, in a sense, all the, situation in the energy scenario. And whether this is really going to impact Russia, which we really don't know. One, of course, is that many things will depend on the world oil prices anyway, and what kind of price they agree among themselves, because still it's not very clear. I mean, the US, they have, kind of indicated some kind of price. Europeans have not really come together that, what price would be, because some of the members want very low price, particularly Poland and the Baltics, but at the same time, countries which are more dependent on the shipping industry, like Greece, Malta, Cyprus, they think that they would lose a lot of shipping business, so they are more interested in the higher price. So at the same time, if the world oil prices anyway are not very high, and as was mentioned by Kate, I mean, this is already Europe is, already Russia is selling somewhere around, 65, 70. That's the price, at discounted price to many countries. So impact on Russia, I mean, it's very uncertain what impact it's going to have. At the same time, apart from some of the G7 countries, I don't think many other countries are going to accept this ban anyway. I mean, other larger importers of oil, whether China, Russia, Turkey, and many other countries in Asia and in other developing countries, I mean, they are not going to accept this ban. But of course, I mean, Europe is also a very important player as far as the energy market is concerned. But anyway, they have already decided to diversify away from Russia. And some of the impact, it's not just only about oil price, but impact is also about, because many of the shipping and insurance companies are based in Europe and the US. So whether they would, there will be certain kind of impact, because they may not participate in the below price cap kind of, those kind of shipping and other work. But still, we really don't know how this is going to impact them. The idea is really that somehow the earlier sanctions, because even if you look at on the insurance and shipping companies, now some of the companies from the UK and US particularly, they are already actually following those sanctions. So it's not really going to make much of impact there. At the same time, whether this will, the Europeans are moving away. So impact on Russia, I mean, still at this point of time, the earlier sanction they thought will really break the Russian kind of back. Now that hasn't really happened, because they're still able to sell oil. At the same time, even the production in Russia is more or less come back to where it was just the Ukraine crisis. So Russia is selling. Other countries are buying, but of course, Russia is selling at a discounted price. But if they come out with a price of 65 to 70 at the present price, it may not really impact much. But of course, if the price goes up in the future, which at the moment does not look like, because now there is already possibility of recession in 2023 in US and in Europe. China there is a serious problem of a slowdown because of the COVID and other restrictions. So the possibilities of price going up beyond 100 is not really, I mean, at this point of time can be ruled it out.
Okay.
So, I mean, I don't think this is really going to make much impact as far as the Russian resource and revenues are concerned, as well as also, but of course, this will create many disturbances unnecessarily in the energy market.
Okay, okay. Mr. Chandra, let's also look at it from Indian perspective, and not only Indian, from the perspective of other Asian countries as well, where Russia has rerouted most of its oil export. Opportunity here, and if this price cap is implemented, and which of course Russia will not adhere to, then the market, major market left for Russia to export it to is Asian countries, including India.
You see, sanctions are notoriously difficult to enforce. Oil being the most politicized commodity in the world has been repeatedly subjected to sanction, right from 1955 Iranian Revolution to Iran of today. They have failed to achieve their political objectives. Yes, they have caused a lot of economic distress, and that is what we are looking at. Now, what happens if these sanctions come to force? It will affect insurance, it will affect finance, it will affect maritime services. It has already created a lot of uncertainty. From what I read, Reliance has stopped, at least put on hold, buying of crude oil from Russia. We're awaiting what's going to happen next. Indian Oil is very wary of it, and market abhors uncertainty. Therefore, there will be a lot of fluctuations in the crude oil price. But hydrocarbons are not restricted to crude oil. Sanctions against crude oil might result in disruption of Russian gas supply to Europe. It might result in disruption of export of petroleum products to Europe. The ban on petroleum products is also scheduled to come into effect in February.
Mm-hmm.
You have to see the entire basket. Where all is it going to affect the market? What is certain is that the hydrocarbon flow is going to change completely. LNG, spot market, everybody is going to fight for it. You might have Saudi Arabia or India buying crude oil from Russia and exporting diesel to Europe. Because diesel is one thing which is going to be hit quite badly. So in the larger game, what we see is a lot of uncertainty, a lot of price fluctuation. The GRMs between crude oil and diesel may go completely awry, and diesel is something which will trouble them. Gasoline is troubling the buyer in USA, and it will have political impact. Prices have had political impacts for decades.
Mm-hmm.
So that is what we are looking at, a lot of uncertainty.
Okay, a lot of uncertainty there, of course. And as Mr. Chandra was pointing out, markets don't like uncertain times or uncertain signals. They are, Kate, this aspect which Mr. Chandra was referring to, that may perhaps, further increase the woes as far as European nations are concerned. They're already feeling the pinch of the energy crisis, but in Feb, when it comes down to, the other petroleum products, specifically diesel, then maybe we might get to see the real feel of these decisions which are being taken now.
Yes, I mean, I think we've seen gasoline stocks in the US are quite healthy at the moment, but yes, diesel will be a problem. And of course, one of the main impacts of this crisis has been on industry, particularly in Germany, which is, as we know, is the sort of the driver, the economic driver within the EU. So, and of course, we are seeing more supplies from the Middle East, and we've got new refining capacity coming alongside. But again, as the oil products ban, which is coming into effect in February, that's going to have a huge impact. And I don't think there's yet enough additional supply to make up for Russian diesel, because they are, after all, they are big suppliers. And you're talking about 2.5 million barrels combined of oil and refined products that may be disrupted. And we've mentioned shipping. It's finding enough tankers to carry this. And, the tanker fleet in Russia alone is not enough. They have very old tankers, which also raises the issue of insurance, safety on the seas. Are they going to be able to deliver to certain countries where if you've got a tanker that's more than, that's end of life. So I think it's going to be very disruptive. But, again, sanctions have not really worked, because you look at Iran. Iran is still exporting oil. Yes, they are offering it at preferential prices, maybe not a steep discount, but they don't really work. And when you start interfering, and politicians start interfering in a free market, there's always going to be problems, because they don't really understand it. We've seen it in derivatives markets. We've seen it when you have major disruptions. All it's doing is creating volatility. There hasn't really been a severe shortage in oil supply. The market has been tight, but it hasn't really been short. Now, it remains to be seen how the OPEC Plus will respond. They are meeting a day before the ban comes into effect. So any decision that the OPEC Plus takes will be very interesting to watch, because after all, Russia is one of the leading members, along with Saudi Arabia. If they decide to cut or increase, that would signal to the market what the balances are likely to be. But in the first quarter, I think we will see a disruption. We may see prices going up, maybe not to sort of near record levels, but I think it's going to be.
Okay. Indeed, it's going to be very interesting and important to see how it further moves ahead from here onwards. But Mr. Gill, that aspect of the other oil producers as well, as Kate was mentioning, it'll be really interesting and important to see and witness as to what kind of stance do they take in the coming weeks and months when all these decisions are being implemented.
Right, absolutely. And in fact, just a couple of days ago, President Putin was discussing this very issue with the leadership in Iraq, of course, members of the OPEC Plus, in order to voice out their concerns, of course, where the possibilities of disruptions in the international oil market can create more problems in terms of sustainable development for the world. And this is the major concern that we have, and I agree with the consensus of my distinguished co-panelists. It's that level of uncertainty that is creating more problems than the actual discussions on the price cap. And, the second question is, how would it be enforced? And, as everyone has mentioned, there is still a significant problem in how to enforce it and whether there would be consensus in the international community. So what we are facing now is a challenge not only for the developed world but also for the developing world. And you've mentioned about Europe. We have to understand that the major problem would actually come not on December 5, but on February 5. As Ms. Kate Dourian has significantly placed, Europe still has several cars, lots of cars that run on diesel, the industries that run on diesel as well. So how would they be able to cope with that? And the rerouting, of course, also costs them a lot of money. And with what is happening right now, the international economic landscape isn't as favorable as they want it to be. So everyone will be scrambling for resources, and this would be, that uncertainty would be catastrophic as well.
Okay. Professor Sachdeva, from the European point of view, if you have to understand it a bit more on a deeper level, then it's just not about the energy, it's also about the economic situation there. It's also about where do they stand geopolitically on various issues. And as Mr. Chandra was referring to, that, politics do play a very important role as to how things move ahead, specifically when you're talking about these important commodities like petroleum products.
Absolutely. I mean, now, of course, this is a major geopolitical question as far as Europe is concerned, because they really want to press Russia on, as many counts as they possible. So now earlier, all kind of sanctions, unprecedented sanctions, which were imposed against Russia. So they thought, because of that, Russia will change its behavior. Now that hasn't really happened much. And even on the energy systems, they were heavily dependent on, at one level, of course, they have decided to move away from Russian dependence slowly and slowly. but that's going to take some time, because even this price cap is, applicable, basically on the seaborne kind of, oil, not really on the pipelines. And most of the European oil comes basically through pipelines. So it means that will not really impact Europe. At the same time, within Europe, still, I mean, they would find certain exceptions. Hungarians would like different kind of exceptions. And they have also, it's not just, I mean, earlier, the US was talking about 5th December. Now they want a transition period for a couple of more weeks. If your cap is very high, then it's not going to make any impact. But if you have a price is lower, then it will create much more complications for other issues. I mean, the security and the supply of oil. We really don't know what impact this will have on Europe and the broader global market. But this is a geopolitical, again, I would say, a message they want to do it, message they want to send it across, that they're very serious about this. They really want to, impose certain kind of things, against Russia. But the markets don't really work only on the basis of what few countries really decide or they announce.
Indeed.
Because there are so many other factors. Now, of course, everybody has seen that in the last 1 year, their sanctions have not really worked the way it was expected. And the global demand of energy, again, is not going to be in the next 1 or 2 years as it was expected earlier.
Okay.
So those factors, my feeling is that much more important than what they are really going to decide.
Okay.
And if they have, it will take some time for them to even to come to a certain figure what kind of a cap is going to be.
Okay.
So Europe, of course, is because of this, they are feeling a lot of trouble. But compared to other developing countries, because of it, there is uncertainty in the energy market, because Europe is also very much dependent on outside energy, because more than 50% energy comes from outside. But Europe, they do have resources.
Okay.
So for a couple of years, there's absolutely not really a problem for them because of their political or geopolitical game. If they want to spend some money more, I mean, they have certain resources. But the problem is actually for other countries, because the actions of G7 countries, of Europeans and the US, I mean, that's going to have unnecessarily disturbance in the global energy market.
Okay.
And other countries are going to face consequences of their actions.
Okay.
Which actually they are not considering, because they are too much concerned about, how to really punish Russia.
Okay.
So, yes, I mean, at certain broad level, they have decided that, slowly we'll move away from Russia. And because of that, all these actions are being taken. But energy market will work now. I think they have already discounted
Indeed.
some of these fears. And now, because the demand is less, so I think energy market, there will be some uncertainty, but not really such a big disturbance by this particular kind of price cap.
Okay. Indeed, Professor Sachdeva, and since you're mentioning, the kind of impact it might have on others, apart from the European nations and other Western countries, Mr. Chandra, a quick concluding comment from you in terms of the kind of impact developing countries like India might face, and specifically from an Indian perspective as well. What can we watch out for?
See, if the oil prices don't come down, the trade deficit is a problem. The trade deficit is resulting in a current account deficit, because remittances and other invisibles and export of services may or may not be able to plug the gap. We need more FDI. We need more FII. Otherwise, things are going to get difficult for India. And this is going to be true for a large number of oil importing countries. So a cap, in a way, which I don't think would be enforced, but it could lower crude oil prices, would in a way help the oil importing countries.
Okay.
Just to give it a bit of perspective, if you look at the figures, Russia crude oil exports is about 5 million barrels per day, out of which about 2.7 million barrels goes to Europe, 1.9 by the sea route, and 0.8 by pipeline. Now politics comes into play. Pipeline has been exempted. Now of this 1.9 million barrels, they've already found markets in China, India and other countries. And so I don't think Russians will find it difficult to sell oil, maybe at a discounted price. And actually, Russia's revenue from oil exports has gone up. The ruble is strengthened. and they have much more foreign exchange in their banks.
Okay. Okay.
The problem will be gas, because Germany doesn't have any regasification terminals. There's a problem of pipelines within intra-Europe, and that is what is the biggest problem. And this winter is going to be notoriously difficult for Europe. They saw it 200 years ago. The General Winter defeated Napoleon. Hitler got hit, and I think we are looking at a very difficult winter going ahead.
Okay, okay, there it is. Thank you so much, Mr. Chandra, Kate, Mr. Gill, and Professor Sachdeva as well for sharing your views and insight with us and our viewers as our experts were pointing out and explaining, analyzing how will the price cap on Russian oil exports work out and what kind of impact it will have on the global energy markets and the global economy, specifically on countries other than Europe and other Western nations, and also their efforts to try and hold back Russian earnings from the oil market. We'll keep a close look on all these aspects and come back again with different issues. Till then, keep watching Sansad Television. Thank you.